For usual, everything else channel for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at the legacy side of things, which admittedly has a lot more action to the long side. A few crypto charts in the beginning here that bleed into legacy. We've got global ETP flows for crypto, again negative 1.75 billion or so. Unlikely to see anything constructive on crypto until flows at least neutralize and are flat. For the most part, they've kind of been binary since inception, since the BTC ETF. They've been very positive or somewhat negative. Today I wrote for Canary talking about the 2-year moving average multiplier on BTC, which we are now below the 2-year moving average, which historically has taken a little bit of time to recover from, around 200 days, and has been a decent value area for dollar cost averaging. Slow, just steady stack and sats, baby. That's what it's all about, below the 2-year moving average. And MVRV, which is an on-chain metric measuring market cap against realized value, is also plunging to depths not seen since the beginning of the bull market in 2023. The R stands for realized value, so that's the average of all coins moved on-chain at their price. And at 0, you are at break even. There is no unrealized profits remaining. MSTR is at or below their unrealized profit level. Spot BTC ETFs are at or below their unrealized profit level. So there's not really a lot of profit left in the market at these prices for BTC. And I think ETH is actually far worse. I think ETH, the average cost basis, is much higher now. So we're certainly not in a mega euphoric, hugely bullish environment. The cloud reiterates that really ever since October, November, even slightly prior to that when we failed the continuation here at all-time highs. Things have, for the most part, gone one way, and alts have done worse, as you'd expect. Most alts never kept up in 25 and are certainly keeping up and then some on the downside since mid-25. And if you're looking for a bull trend, this ain't it on most timeframes. As I said yesterday, we're probably going to need 3 months of consolidation before anybody's confident at taking a breakout trade again. So we got time on top of time, and that aligns with the 2-year moving average. That potentially aligns with realized price at 55K, 200-week moving average at 58K. And just in case you needed a reminder to not hold leveraged ETFs that are long in a bear market, BITU getting absolutely pummeled here, down to 17. This is almost an all-time low from 62. Good reminder to use leverage sparingly when you have momentum. If you don't have momentum, if you're unsure, if it's not a hell yes, it's a no. And another signal to watch is how low can this go and how low can it just skip across the bottom, sub 10 or something like that. And this is a leveraged silver ETF, AGQ. Again, you know, if you're in parabolic moves, you got to close this stuff slightly early. You got to stack your asks on the way up, and it's fine to rotate into spot, but you got to be very, very careful with these leveraged ETFs. It was down 70% in 2 days from the highs, from 440 to 140. Ugly stuff, very ugly stuff. Onto miners, WGMI, kind of just flatlining here. IREN looks better. We'll look at that in a second, but really nothing of substance. It looked good. It doesn't look terrible relative to crypto, honestly, but it looked good until it broke below the cloud. Now, at that point, you're going from bullish to neutral, and the bias in the trend becomes a lot less obvious. You always like to see continuation, regardless if it goes nowhere. You know, if you get day over day continuation after a breakout, that's best case scenario. Now, you still have the Adam and Eve here, but not really much confidence in the index, if you will, of WGMI. IREN to me still looks a lot better. It's above the cloud. I have no issues adding here, no issues doing anything here with IREN. Still looks totally fine. Still has a bearish cloud. So maybe the next signal to take would be bullish Kumo twist, but this, relative to most of the miners, looks excellent. And it's definitely still the market leader. Can this break down? Sure, but I still like it. I'm still holding it. No issues there. MSTR continues to slowly bleed lower to new multi-week lows. And I will maintain this idea that eventually there will be a trade here to try. It's just slightly early, maybe into March, maybe into April, right? We'll see. Or maybe not, but definitely worth setting some alerts, taking a peek, just in case everybody's wrong about the bear market. 170 to 250 is a massive trade at MSTR, if you can catch that. Something else to watch that's interesting here, because it's been down so much since July, would be MSTR over IBIT, just MSTR BTC effectively. What will this look like mid-year? Can this bounce? Can this hold this level? Just something to think about, again, on a relative value basis. It's interesting that it's holding what it's holding since January. Too early still for a trade, in my opinion, but interesting. ETH, again, nothing to say here. It's, to me, I need 3 months. Give me 3 months of candles and we'll figure it out. ETH as well, new multi-month lows. Not something to just be holding on to in a bear period. Coin looks a lot like these leveraged crypto charts. Coinbase just puking lower. This is way worse than MSTR, in my opinion, the way this looks, even though MSTR is down more from highs. This just looks like no bid. It looks like no one cares. Again, what do you want? You want multi-month, bottomy structures. This likely follows ETH up and down as it did in July. It's closer to ETH than BTC, closer to Hood than BTC. Hood also looks, Robinhood looks very bearish, continuing to break down from the head and shoulders. That's why it's best to take these reconsolidation trades once you have the cloud on your side, not just sort of guess when it's drifting lower like that. And if we want to talk about an exchange that is holding on to highs, Schwab looks great, still looks great, quietly just trucking here at all-time highs. I think it's all-time highs. Looks fine for bullish continuation. And Circle at all-time lows. So not only are crypto coins, tokens doing well, horrible, but so are the crypto companies. Just nothing, just absolutely nothing here. You know, maybe you get some market reaction off a legislative bill, but trend-wise, not bullish. Galaxy chopping around, also not bullish at all. And since it broke out from 20, it's really had trouble holding highs. Backed another one. I tried to pull all the crypto companies. Also just doesn't look good. Continues to just consolidate and you're stuck in this multi-year chop. So on the crypto side, unsurprisingly, just nothing to do, nothing to think about really, not yet. For the US data releases this week, PMI and ISM came out. Both were slightly higher than expected. People are celebrating that. I think it's a multi-month high on ISM. There's some correlation with ISM and crypto. We'll see. Crypto clearly doesn't look tradable to the long side to me just yet. We have JOLTS this week, ADP this week, and the unemployment rate was supposed to get released Friday, but it will be delayed because of the government shutdown. And who knows when they're going to release that, maybe the week after. I don't think this government shutdown is going to be very long. It's probably going to be a week at most, as it is a partial government shutdown. I think the House has to vote on something, but delayed data, loss of data integrity, all just continue to hurt the market, in my opinion, because the market wants clarity. It wants obvious directionality in what's going on. No Fed meeting this month. The next meeting is in March, and it's already pricing in no cut. Basically no cuts until Powell's gone. So the market is unlikely to see, again, on the crypto side, unlikely to see any relief from rates coming lower. A lot of people have been talking about Kevin Warsh, both good and bad, and Renmac has mapped out his comments, thanks to AI, before and after Trump came into office. And it's interesting that things got a lot more dovish with Trump. So as hawkish as Warsh has been historically, it's quite possible that he'll come in there and just be a total dove and rates will come down. He won't care about the balance sheet, et cetera, et cetera. But it definitely seems like the market was concerned at how hawkish he has been historically. Looking at Truflation, this actually got down to 0.87 over the weekend and continues to just crush lower, just continues to push lower. Food and bev down, housing down, transport down, utilities finally coming down, health down. So all the components that you care about are all lower on the real-time gauge, except education there, it looks like. But housing is definitely a big one, and that has dropped significantly over the past couple weeks. So we'll see if this works its way into the government data. January is done, so this is the estimate for January. Still waiting on PCE and core. This stuff is just so delayed and lagged. It's going to take a while for all this to catch up. We're 2 days into February, so I would take this with a grain of salt. But the closer the estimates get to 2%, two handle, one would think the market would start pricing in rates coming lower. GDP ticked down a little bit, but hugely positive still. Nothing to complain about there. Not going to see a recession if GDP is positive. And you're probably not going to see a recession until unemployment spikes considerably. Haven't seen that yet either. So although the K-shaped economy continues on, things are not bad enough to show up, at least in the official government data. Looking at the bond complex, all this is curling down. Not what you want to see from a trading perspective, price-wise, and is gently signaling rates going higher, slowly. This again could be a Warsh effect, a wash out, if you will. On equities, just keep trucking, right? Again, this is the case, the top part of the K. Top part of the K continues to buy the SPY. SPY almost back to all-time highs at 700. We've got the equal weighted SPY, RSP, back at highs. None of this is bearish. Absolutely not. It isn't, huge momentum bullish, but it's certainly not bearish. QQQE also looks fine here. Just chilling, flat, equal weighted tech. There are certain sectors and pockets of the Mag 7, especially, that look very bearish. Microsoft continues to go lower. Netflix continues to go lower. But the rest of these have sort of saved the group. NVIDIA just chilling at the neckline there, or not at the right shoulder. Apple pulling up, Google all-time highs, Amazon starting to take off a little bit, Meta pulling up quite a bit, Tesla just flat. So for the indices, this means that on balance, things are okay. Things are okay. Now, if all of these were selling off, like they were in 2022, different story. But Google and Apple certainly holding up the rest of them. And if we look at hardware versus software, this looks like the silver chart, right? Hardware continues to dominate. Likely the market signal saying software doesn't have the mode it once did, thanks to AI, is my guess. And AI still needs a lot of hardware. So this ratio continues to just push higher. IGV looks atrocious as a chart. Another ratio chart, XLY versus XLP. This is consumer staples versus consumer discretionary. And this looks quite toppy, which does correlate closer with risk off than risk on. It correlates closer with defensive type posture. So definitely one to watch and set some alerts on. It's a tough trading environment out there right now because there's a few names that have done well, continue to do well, and GEV continues to look great. On the energy side, a lot of names on the metal side still look okay. Big indices flat, sort of momentumless, but they look okay. Here's an old name, Gurn, breaking out. And OLPX even starting to break out a little bit. So I like patience here. I like doing nothing and avoiding crypto as much as you can. Just try not to lose money. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.